The dollar has had a tough few months. It's been on the decline ever since Trump took office, but it enjoyed a moment of respite earlier this month, stabilizing against most major currencies. However, in the past couple of days, it's suddenly collapsed, with the so-called dollar index, which measures the strength of the dollar against a weighted basket of other major currencies, on Thursday plummeting to its lowest level since February 2022. So in this video, we're going to take a look at why the dollar has resumed its decline, and why it's mostly to do with the ever-escalating feud with the Fed. We're getting ever closer to 1 million subscribers, and 68% of you aren't even subscribed yet. So lend us a hand and subscribe today. So let's get straight into it. As we see it, there are two big reasons for the dollar's recent decline. The first is the Middle East. As you might have noticed, over the past couple of weeks there was a brief war between Iran and Israel / the US. During this time, the dollar saw a slight strengthening, presumably because investors moved their cash into the dollar and dollar-denominated assets like US government bonds, which have long been considered safe assets in response to the geopolitical turmoil and the associated uncertainty. Now, as we've noticed in previous videos, the dollar has lost some of its appeal as a safe haven since Trump took office, as evidenced by the fact that both American stocks and the dollar declined at the same time, which didn't used to happen, and isn't what you'd expect to happen from a safe haven currency. This is both because investors worry that Trump's unorthodox economic policies might stoke inflation, thus eroding the real value of the dollar, and because the Trump administration has shown an interest in restricting capital flows. For context, the fact that foreigners could easily move their money in and out of the US was one of the reasons that the dollar was considered a safe haven. It was easy to get in, and it was easy to get out. However, at least some of Trump's team have argued in the past that these free capital flows have ultimately hurt the US economy by pushing up the value of the dollar and thus undermining the international competitiveness of American manufacturing. Furthermore, Trump's One Big Beautiful Bill contains a number of provisions that would make it harder for foreigners to move their money in and out of the US, including most notably Section 899, which would allow the administration to tax foreigners holding dollar assets if the administration deemed their home country's tax regime unfair to American corporates. This has all made the dollar somewhat less attractive as a safe haven, which is why it's tended downwards over the last couple of months. Nonetheless, the chaos in the Middle East provided some respite for the dollar, both because even if it is less safe than it once was, it's still safer than a lot of other currencies, and because the US would actually be relatively well insulated from a war in the Middle East, while Europe and much of Asia would be devastated by a sharp uptick in oil prices, and Europe will probably have to deal with another wave of immigration from affected countries. However, an uptick in oil prices wouldn't be unequivocally bad news for the US, given that it's currently the largest oil producer in the world thanks to a rise in shale oil. Anyway, this is why the dollar actually strengthened during the war, as you can see from looking at the dollar index. The dollar fell relatively steadily throughout the first 2 weeks of June, but strengthened after Israel's first round of strikes against Iran on June 13th. However, once Trump imposed the ceasefire and markets decided that there was no longer a real risk of war in the Middle East, the boost the dollar had enjoyed as a relative safe haven evaporated. Anyway, that's the first reason. The Iran-Israel war provided a temporary boost to the dollar as a relative safe haven. The second reason, however, is Trump's escalating war with the Federal Reserve. As we've detailed in previous videos, for the past couple of months, Trump has been publicly pressuring the Federal Reserve, and especially its chair Jerome Powell, to cut interest rates, which would provide a boost to the American economy. Powell and the Board of Governors, i.e. the 6 people who vote with Powell to decide interest rates, have so far resisted, despite signs of weakness in the American economy and the fact that inflation numbers have actually been pretty good recently, coming in at 2.3% in April and 2.4% in May, below forecast and only a smidge above the Fed's 2% target. This is essentially because the Fed still thinks there's too much uncertainty, especially about the potential inflationary effects of tariffs, which will be massively exacerbated if Trump imposes his Liberation Day tariffs on July 9th, as he's promised to do. As of yet, only the UK and China have agreed any sort of deal to mitigate these tariffs, and the US is still in negotiations with around 20 other trading partners, including the EU. Anyway, this has been a long-running point of friction between Trump and Powell, but tension receded a couple of months ago when Trump backed down and said that he wouldn't sack Powell before his term ends in May 2026. However, in recent days, this feud has reignited. This really started after two governors came out in support of Trump, saying that they didn't think tariffs would be inflationary and calling for rate cuts in the Fed's next meeting. This was pretty unusual. Governors usually try and stay out of the headlines, and it was quickly resisted by both Powell and another governor who said that the current policy of wait and see was appropriate given the uncertainty. This drew renewed ire from Trump, who called Powell, quote, terrible, low IQ, and very stupid a couple of days ago, and said that he was already considering Powell's successor. This series of events put downward pressure on the dollar for two reasons. First, markets think that rate cuts are now more likely, given that two of the Fed's 7 governors are now explicitly supportive, and rate cuts make saving in dollars less attractive, thus weakening the currency. Second, Trump's renewed attack on Powell and the fact that he's already considering successors has renewed anxieties about Trump sacking Powell early, which would dramatically undermine the Fed's independence. For context, the Federal Reserve is supposed to be independent, i.e. able to make monetary policy and set interest rates without political or governmental interference. This is because, in theory, independent central banks are better at controlling inflation because politicians don't like raising interest rates and thus have a bit of a habit of letting inflation get out of control. The Fed's perceived independence is one of the big reasons that it's the world's reserve currency. Investors trust the Fed to protect the dollar's value against inflation, so they see it as more safe. Trump sacking Powell, or even just replacing him with some patently political candidate next year, would undermine the Fed's independence and increase the risk of inflation eroding the dollar, thus making it less attractive. Now, when talking about topics like these, it's important to be precise, and precision is also crucial to our sponsor this week, Henson Shaving. Henson's AL13 razor, which they produce at their aerospace machine shop, perfectly holds blades at a 30-degree angle and extends them only 0.0013 inches, less than the width of a human hair, which means incredibly tight tolerances, very high standards, and superb precision, offering a much healthier shave compared to the overpriced plastic razor cartridges. And speaking of plastic, Henson's razors are completely plastic-free. From the blade to the box, everything Henson sends you is entirely recyclable, meaning that while you protect your skin from expensive razor burn, you're also protecting the environment from adding to the 2 billion razor cartridges that are thrown away every year in the US alone. Finally, buying Henson razors is simply cheaper. No longer will you be forced into buying those expensive and unsupportive replacement blades, as Henson blades cost about 10 cents each. This means that you can replace your blades far more frequently, so you don't need to keep dragging a dull razor across your face in order to get value out of that overpriced plastic. If you want to try it out, then you can go to hensonshaving.com/TLDR or click the link in the description. And then you can add a razor and 100 blades to your cart. Once you've done that, add discount code TLDR at checkout and you'll get all of those blades totally free. And you'll be on the way to a healthier shave.